Hey everyone, welcome back to Corporate Decoder, the place where we decode the wild world of corporate finance. Today we're diving into a report that is a bit of a puzzle, with big deals and shifting gears, maybe even a surprise accountant switcheroo. Get ready, because this filing from Resolute Holdings Management Incorporated is packed with some major moves. We're talking about a huge acquisition, a significant financial deal, and a change in who is crunching their numbers. First off, they're making a clear statement by opting out of a special grace period for new accounting rules. This usually signals that a company feels confident about its ability to keep up with the latest financial reporting standards. It is a subtle hint that they're ready for the spotlight and want to show their financial health in the most up-to-date way possible. Now, let's get to the big news on the 12th of January 2026. CompoSecure, which is linked to Resolute Holdings Management, completed a massive combination with a company called Husky. This wasn't just a small handshake deal. Oh no. They spent about $3.953 billion in cash and also handed over a hefty chunk of CompoSecure's stock, over 55 million shares. Imagine trying to count that many shares. This deal is designed to bring Husky's business under the CompoSecure umbrella. It's a huge step and involves a lot of complex financial shuffling behind the scenes. On top of that, right as this big combination was closing, CompoSecure also finalized some separate purchase agreements. Think of it as a strategic buying spree. They sold another 106 million shares of their stock to investors for a cool $1.96 billion. That price works out to $18.5 per ace hair. This kind of move often happens to help fund such a large acquisition, sort of like getting a big loan from a group of friendly investors. What does this mean for Resolute Holdings Management itself? Well, it looks like they're stepping in to manage the day-to-day operations and strategy of Husky Holdings, the part of the company that now holds the Husky business. They've signed a management agreement that will pay them a quarterly fee. This fee is a pretty interesting number. 2.5% of Husky Holdings' adjusted earnings over the last 12 months. This means Resolute's income from this deal is directly tied to how well Husky performs, which is a common way to align business interests. The agreement also includes provisions for reimbursement of expenses and has a nice 10-year renewal term, with options for longer. They even have the right to get a termination fee if things go south, which could be paid in cash, stock, or a mix of both. Now let's talk about the money load that came with this deal. CompoSecure took on Husky's existing debt. This includes nearly $1.724 billion under a term loan, $350 million from a delayed draw term loan, and $50 million from a revolving credit facility. That is already over $2.1 billion in credit facilities. But that is not all. They also assumed $1 billion in senior secured notes that are due in 2029. So we're looking at over $3.1 billion in debt that CompoSecure is now responsible for. To manage this, CompoSecure is planning to refinance these existing credit facilities and notes. They're hoping to get this done by the 14th of January, just a couple of days after the deal closed. Husky is also trying to get ahead of this by planning to redeem all of those notes by the 13th of January. It is a flurry of financial activity to clean up the balance sheet after such a massive acquisition. And here is a curveball for you. Just a few days before this whole deal wrapped up, on the 9th of January, the company's audit committee made a pretty significant change. They decided to let go of their accounting firm, Grant Thornton LLP, and who is stepping in to be their new auditors for 2026? None other than Ernst & Young LLP, also known as EI. Now, this doesn't affect Grant Thornton's work auditing the 2025 financial statements, but it is a big shift. Companies usually change auditors for various reasons, sometimes for a fresh perspective, or if they're entering a new phase like a big merger. They also stated that there were no major disagreements with Grant Thornton leading up to this decision. Because this report is about a major acquisition, the company has stated that they will file the actual financial statements for the acquired business later. Within 71 days, they'll also be filing pro forma financial information, which essentially means they'll show you what the combined company's financials would look like if the deal had happened earlier. This is crucial for investors to understand the true financial picture after the merger. Looking at the exhibits, we see the management agreement that Resolute Holdings Management signed with Husky Holdings. This document is the nitty-gritty of how they'll be managing Husky and earning their fees. We also see a letter from Grant Thornton LLP to the SEC confirming their departure, and the cover page interactive data file which contains the XBRL tags for the filing. So what is the real story here? Resolute Holdings Management, through its association with CompoSecure, is clearly embarking on a new chapter. They've facilitated a massive combination with Husky, taking on significant financial responsibilities. including a huge amount of debt, but also securing a management role that could be very lucrative. The shift in auditors suggests they're gearing up for a new era, perhaps anticipating more complex financial reporting with the combined entity. Now, looking at these numbers and this strategy, it seems like Resolute Holdings management is betting big on the future of Husky. By taking on a management role and earning fees based on Husky's performance, they're heavily invested in its success. The debt levels are substantial, over $3.1 billion, which is a definite risk factor. If Husky underperforms, CompoSecure and by extension Resolute could face significant financial strain. However, the management agreement is structured to reward them for success, which is a good sign. The appointment of IAS auditors could bring a fresh, rigorous approach to financial reporting, which is always a positive when dealing with such large transactions and debt loads. The biggest opportunity here is the integration of Husky's business and the potential for growth under this new management structure. The risk is clearly the execution of this integration and the ability to manage the significant debt burden if they can successfully streamline operations and drive profitability for Husky. This could be a game changer for CompoSecure and further solidify Resolute Holdings management's position. In conclusion, this filing paints a picture of a company making bold moves, leveraging large financial deals to expand its influence. It is a high-stakes play with significant potential rewards, but also substantial risks tied to debt management and operational execution. Alright, that is our breakdown of this fascinating filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.